Another guest in now. Ratnesh Kumar, Managing Director and CEO of Standard Chartered Securities, joins us here in the studio. Ratnesh, hi. Good morning. First up, what do you think will disappoint the market in this budget, if it comes through?
See, the way the market is looking at it, it is looking at the government to make doing business in India easier, making foreign investment more welcome. So if there was to be nothing on retro tax or GAR, I think that will be a disappointment. But I do expect something to be there. I think that is very critical. For all the initiatives that the government might do on FDI, etc. If the retro tax, there's no comfort, then I think all of that can come to null and void.
Well, Samir, you were giving us that expectations. Most of it is actually improving economy, improving cyclicals. So what is the kind of stocks that you would bet on? Would you just move away, or have you already moved away from the IT pharma kind of names, and you're expecting alpha gains, big gains only from cyclicals?
No, we have them and we bought even last month, but before that, let's forget about my stock. Let's talk about the market in general.
Okay.
The thing is that it is unreasonable 5 minutes before the budget speech to think what will disappoint, when less than 1 week ago Mr. Jaitley said that he thinks that retrospective tax is unfair, that he's even willing to write legislation. So he may not write legislation for Vodafone, but today to make our market feel that, oh, what if this doesn't say, he's going to say all those things, not because I'm guessing that they know what to do, but because they have said what they want to do themselves. It has not come from anonymous sources, it has not come from Ministry of Finance, it has come from him personally. Secondly, and the only thing I hope they remember is that for this market to accept and buy into $15-16 billion of PSUs, it means A, that PSUs have to be reformed, but more importantly that the market has to be kept in good humor. And therefore the market to be kept in good humor is very easy: postpone GAR or change short-term capital gains to zero. Anyway, the GAR goes away for 80% of the crowd. Take in the same amount of money from higher STT by removing short-term capital gains, remove short-term capital gains, substitute with STT, and you can still have it, and GAR would become redundant for 70-80% of the crowd. So it's easy. But beyond that, what they have themselves said less than 3, 4, 5 days ago, today to feel that they won't do and be negative on it. So first
no, Samir, actually the reason I asked Ratnesh that question is because if you use that same analogy, then what was laid out in the BJP manifesto for the railway budget was the exact same thing that came out in the railway budget itself, but it was short on specifics, and then the market got disappointed. So I think somewhere down the line it's also about expectations.
I'm sorry. Market didn't get disappointed on the railway budget because there was no need for, let us say, Jubilant Foodworks to be down 5% that day because they got upset with the railway budget, or that United Phosphorus fell down. So please, they got disappointed because it didn't go up that day, and the people who were overly leveraged and who had bought these these QIPs realized that they punted too rashly for a few minutes. So all that will sort itself out. But if only railway-related stocks had fallen, I could have accepted it. They were just over-leveraged, overextended, that's all.
Okay,
that point is taken, but still talk a little bit about your stock preferences, Samir. What would you be eyeing now? Which are going to be the outperformers of this market?
Well, we don't overly concentrate only on current outperformers because of days like last 2 days where suddenly they are. So in general, everybody is, at least who is running a fund, is mostly in a number of sectors, but his percentage overweight, underweight changes. But when I tell that to an individual and who is not going to buy 35 stocks but will buy 2 stocks, he'll buy my last stock, and Mr. Jaitley may not say that one word for him. So best is tell him to go and buy somebody's mutual fund and enjoy the budget rather than try to figure out stocks himself or herself.
Give us your first to 10. No, don't give me your 35.
Okay, let's make it a little specific. The last time you told us that you have a 400-time multi-bagger called HDFC Bank in your portfolio. What are the other multi-baggers that you're looking at now?
No. This has already become, it's not that I'm expecting it. So when I bought it, I would have been happy if it had doubled.
Okay.
If it had doubled at that time, I would have been happy. I've had 100 baggers also, but that's not the point. When you buy it, you don't think that they are like that. It comes with reinforcement and execution. Actually, again, look at it differently. Suppose this budget was not to disappoint, but nothing new comes about. People get so upset. Oh, there was nothing new. He did not beat expectations. HDFC Bank for the last 60 quarters has never beaten expectations. It has only delivered on expectations and keeps delivering. So the delivery is a big part, but not what will be next. What will he do next? This was already expected. Even if somebody delivers what is expected and keeps delivering on that year in, year out, and that is what we expect from this government. They don't have to do dramatic things, but they must get me bathrooms in my train first, and they must get me clean food and accident-free, and that is a mega deal for India.
All right, by the way, the market is now at the high point of the day, 120 point higher on the Sensex. So quite clearly, heading into the event with positive mindset. Ratnesh, what's your call for the second half of the year? First half has been so good for the market. Can there be a repeat in the second half, or will second half be about preserving the gains that we have made so far?
No, I think there will be positive gains for the market in the second half as well. Obviously, in the first half, we were coming off a low point. So there was percentage gain was higher. So I think going forward, you will see percentage gains somewhat moderated, but it is still going to be positive because it is not because of the budget, but I think because you will see execution from the government. You are already seeing a lot of activity in unbottlenecking the stuck projects. There is about $100 billion of projects, which are called in the resolved projects category by the PMG, Project Management Group. And there is work going on. So, and you would have recently seen the whole environment clearances, etc., going online. So I think market and all of us are focused more on those kind of things, which in the short term will be more critical to revive growth than actual revival of the capex cycle. Revival of the capex cycle, greenfield projects, it's going to be later in the day. 2 years later, 3 years later. What is going to matter for growth revival and hence supporting the market and the earnings, etc., is how we can get some of these low-hanging fruits going. And to my mind, I think that is where the government is also focused. And in addition to that, if the budget can deliver on some of the other things, which will be critical for attracting more FDI, retro tax is one of them, and other factors, then I think we are in good shape for the second half.
Okay. Ratnesh, what is the 12-month target? I don't know if I remember right, but were you the one who said 8,500 year-end, fiscal year-end? Does that still hold? And which will be the outperformers that will take you there?
Well, if you're looking at coming March, by March, it is not unrealistic to expect market to be 8,500 to 9,000, somewhere in that range. Because right now where we are on valuations is just barely above the long-term average. And I would expect the earnings revision cycle has bottomed out. Upgrades have not started, but I think another quarter or two down the road, you could even have upgrades coming through in earnings. So 8,500 to 9,000 by March, and by which time you'll get the final budget as well. Maybe this is a semi-final. You will have two budgets for the market to absorb.
Okay. By the way, ONGC has picked up quite a bit from the lows of trade. So now it's up almost about 1% or so, recovered quite a bit. On the subject of oil and gas, Ratnesh, what is your expectation this time around on subsidies, etc.? Do you think something will come through?
Subsidies, the thing is that subsidies which were provided for bulk of, a whole percentage of them got consumed already. So I think what has also happened is the price hikes which have happened, they have been sustained. So I think you would probably see enough provision in the budget to take care of the subsidy. The bigger thing which the oil and gas sector is looking at is what happens on the gas price over the next couple of months.
Okay. Well, I'm watching the Lok Sabha TV as well, and it says 1.5 minutes or 1.25 minutes for the speech to begin. So, Samir, that is the time we have. What might put you off? Anything negative that is possible?
But before that, one more thing, because Sonia said that the market is up so much. The market is up 20% this year in 6 months. Whereas on average, every other market is also up 15-20%. Not every market, but many markets are up 20%, including Indonesia, Philippines, Thailand, which has had a coup. But look at it differently. In 6 months, our earnings are up, say, 7-8%. That means the market is re-rated 10% because we've had a stable government and we are no longer having a coup. So, A 10% rally, additional rally, just because we've come out of an event with a stable government, doesn't matter what that government is for the moment, is not a lot. Therefore, nothing has happened yet, according to me. All you've got is the fact that an event which could have had a bad outcome, an unstable government, a third front, is not there. And so you got re-rated by some 10-12% in 6 months. What is the big deal? So nothing has happened yet. It is going to start from today at 11 o'clock.
Okay, 10 seconds. 8,500 to 9,000 by March looks eminently achievable.
Yeah, it's very achievable. If that doesn't happen, then this bullishness means has been wrong.
Fair point, fair point.